So Frank, you took Data Domain public. EMC bought it for $2.4 billion. You're the CEO of ServiceNow, which is now a $47 billion plus company. When's Snowflake going public?
Don't have a date yet, but we are certainly preparing the company. I mean, there's an expectation that we will. Timing-wise, obviously we're having an election looming next year, which is a big factor. We're certainly ready in terms of the scale and the velocity of the business. We're not quite ready in terms of preparing ourselves for all the compliance requirements and so on.
The election's a factor in that you want to go public before that, or don't want to go public during that? What's the factor?
Well, I mean, we believe that if we don't get out by, say, end of June, summer recess, then it will be post-election. And what the state of the market will be post-election is anybody's guess.
Interesting. You guys are an interesting play on the cloud economy. You play on AWS, Azure, et cetera, and really argue that you're helping to get customers more access, more analysis of their data. How much do you see that growing? When do you see kind of a level of maturity hitting?
So what was super important for Snowflake is really the ability to take advantage of cloud scale. Most of what you're seeing in cloud computing really does not take advantage of cloud scale. They're just hosting in the cloud. That means, like, great, I don't have to run my own data center, but it can't take advantage of an environment where you have unlimited compute and storage capacity. Snowflake does that. So what does that do? It enables big data in a way that we've never been able to process. And the whole world is trying to figure out their data strategy. That's the biggest thing going, really on the heels of Facebook, Google. Everybody is trying to harness their data. That requires being able to process at tremendous scale, tremendous performance. That's what Snowflake does. That's why the company's been on a tear ever since it hit the market in 2015.
When you see the current IPO market, you see WeWork pulling, Endeavor pulling. What does that tell you about what investors are demanding now, and how does it cause you to think about your own prospects of getting public in the next 9 months?
I always tell investors, try to understand the inherent profitability of a business. That means the unit economics. In other words, it's the basic thing that you're selling. Are you selling at a multiple of what it actually costs? The operating expense side can be manipulated. In other words, you have full control over it. The unit economics are much more persistent, right? So if the unit economics are strong, it's really at the company's will, how profitable and how cash flow positive the business will be. If the unit economics don't add up, you're going to have a problem no matter how much you spend or how little you spend.